Hey everyone, welcome back to Corporate Decoder. Today, CYCU just filed an amendment to an asset purchase agreement, and I am seeing a key extension that hints at bigger things. Quick note, this is not financial advice, just my take on public filings for educational purposes. They pushed back a deal closing and added some serious cash and stock to make it happen. Cycurion Incorporated, the company we are looking at today, is involved in some interesting developments with their acquisition of another business division. They are buying the video solutions part of Kustom Entertainment Incorporated. This includes everything from making video hardware and cameras to selling and supporting all that software. Initially, this deal was set to close earlier, but as is often the case with these kinds of transactions, things got a little delayed. So, on the 23rd of July of 2026, Cycurion and Kustom Entertainment inked an amendment to their original asset purchase agreement. Think of this like a renegotiation to keep the deal alive and moving forward. The main point here is that they agreed to a forbearance, which basically means they will not take any action against each other for missing the original deadline. And crucially, they have extended the expected closing date for this deal to around the 15th of September of 2026. Now, why would Kustom Entertainment agree to extend the closing date? Well, Cycurion had to sweeten the pot. They made an immediate cash payment of $250,000 to Kustom. This money is non-refundable, meaning it is definitely going to Kustom Entertainment no matter what happens next. This shows Cycurion is serious about closing this deal and is willing to pay to secure the extension. But the cash payment is not the only change. Cycurion is also swapping out some warrants for a different type of stock. Instead of issuing 2 million warrants, which are basically options to buy stock later, they are now giving Kustom Entertainment shares of their Series H preferred stock. This Series H preferred stock has a total stated value of $600,000. This is a significant chunk of value being transferred. And this Series H preferred stock is not just sitting there. It comes with a pretty good dividend. It accrues dividends at a rate of 12.0% per year on its stated value. And these dividends are paid out quarterly. So Kustom Entertainment is not only getting shares worth $600,000, but they will also be earning income on those shares while they wait for the deal to fully close. On top of the dividends, these Series H preferred stock shares are convertible into Cycurion's regular common stock. The conversion rate is based on the stated value of the preferred stock plus any accumulated dividends, all divided by $1.45 per S-share. This means Kustom Entertainment can eventually convert their preferred stock into common stock, and the price of $1.45 per S-share suggests Cycurion sees value in its common stock, even if the current market price for its warrants is very low. Now, let's connect this to the company's public trading information. Cycurion has common stock trading under the ticker CYCU and redeemable warrants under CYCU. The warrants are exercisable for one share of common stock at a very high exercise price of $345 per S-share. This is a striking detail given the recent news headlines suggesting the warrants have been trading very low, between $0.02 and $0.07 in the past year. This huge difference between the warrant exercise price and its trading price indicates a significant disconnect, possibly due to market sentiment or the company's overall valuation perception. It is also worth noting that Cycurion has elected to be treated as an emerging growth company. This status allows them to take advantage of certain relaxed regulatory and reporting requirements for a period of time. However, they have chosen not to use the extended transition period for complying with new or revised financial accounting standards. This suggests they are aiming to align with current accounting practices relatively quickly, which can be a positive sign for transparency. Looking at the broader context, this amendment to the asset purchase agreement highlights a common scenario in business acquisitions. Deals can be complex and often require adjustments along the way. The fact that Cycurion is willing to put up more cash and more valuable stock to keep this acquisition alive suggests they see significant strategic value in acquiring Kustom Entertainment's video solutions. Business could be about expanding their product offerings, entering new markets, or consolidating their position in the tech industry. The filing makes it clear that all the necessary conditions for the original agreement have been met or waived. Both parties are still committed to finishing the deal by the new September closing date. This gives a good indication that the acquisition is likely to go through, barring any unforeseen major issues. In terms of financial implications, the extra $250,000 cash payment and the $600,000 in Series H preferred stock represent a substantial increase in the cost of this acquisition for Cycurion. This will impact their cash reserves and potentially dilute existing shareholders if the preferred stock is converted into common stock. However, the potential benefits of acquiring the Video Solutions division could outweigh these costs if the business integration is successful and drives future revenue growth. The signature on this filing is by L. Kevin Kelly, identified as the Chief Executive Officer of Cycurion, Incorporated. This means the company's top leadership is actively involved and approving these significant deal adjustments. Now, looking at this broader picture, Cycurion appears to be making a strategic move to expand its business. The extension of the acquisition closing date, coupled with the increased financial commitment, suggests they are highly motivated to complete this deal. The key question for investors will be how well this newly acquired Video Solutions business integrates with Cycurion's existing operations and what kind of revenue and profit growth it can generate. The significant difference between the warrant exercise price and their trading value remains a notable point of observation for the company's market valuation. What I am actually looking for is how this acquisition contributes to the company's bottom line in the coming quarters, and if it can justify the increased investment. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.